Luminar Technologies develops and sells innovative products that help facilitate the improvement of driverless cars. Now, it doesn't have to be driverless cars completely, it can be assisted driving that Luminar's innovative LiDAR helps facilitate. But for investors, is this stock a buy right now when driverless car technology is arguably several years into the future? I'm going to look at the company's prospects, look at the valuation, and answer if I think this stock is a buy right now in 2025. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now. All right, looking back several years, you can see solid growth in Luminar Technologies revenue up to 75 million, up from around 15 million in 2021, or a roughly 5x increase. What's more, the company recently started delivering its technology to VW in one of their latest models, or sorry, I shouldn't say VW, I should say Volvo in their latest models. And that's going to deliver more revenue for Luminar in the next 4 quarters than it's generated for the majority of its history. If successful, Volvo could expand, and there's already evidence that they are looking to expand their relationship with Luminar Technologies and add more of its LiDAR technology in more vehicles. Like I mentioned, full-on driverless car technology is probably several years into the future, but there's development, incremental development that consumers are willing to pay for. If you can have assisted driving, cruise control, parking assist, lane changing assist, brake awareness, things of that nature, consumers are willing to pay for that, right? So incrementally, they can generate revenue and move forward while the driverless car technology develops and becomes more broadly adapted, maybe 5 years in the future, 10 years in the future. Who knows? But right now, there is driverless cars on the road in Los Angeles. I see them every day in Phoenix, in San Francisco, and they're expanding into other areas in Las Vegas as well, and they're expanding into other cities. The big risk here is that one of the most prominent proponents of driverless car technology, Tesla, is widely known to be developing technology based on cameras only. No expensive LiDAR technology, Tesla says. Tesla says that human beings can drive with only vision. Why do we need sensors in cars? Cars should be able to drive with only vision as well. Now, I will argue that human beings do not only drive with vision, we also use our hearing, right? If you hear someone honking, if you hear somebody slamming on the brakes, that incorporates into your decision making, especially in the most dangerous of situations when a crash is imminent. If you hear a honk or if you hear brakes screeching, it's going to allow you a split second where you can make a change that can potentially save your life or more. But that's besides the point, right? Tesla doesn't really look at the details. They look at making the comments that drive the most popularity for itself. So it remains to be seen what direction the industry goes in terms of driverless car technology. But Luminar Technologies and its LiDAR are arguably the safest, but they are more expensive. So that's the trade-off, is companies that want to scale driverless cars broadly, if they want to, sell millions of driverless cars, they want to be able to do so at a lower price point, and the LiDAR technology is expensive. So the profit margins have been very poor for Luminar Technologies, negative 648% operating margin. Much of this is because they had been in the early days investing significantly in research and development, and only recently have they really ramped up the production and sale of their technology, with the Volvo model coming out with Luminar Technologies LiDAR, and then more models are expected to follow. And now the company's really going to start benefiting from the investments that it's made for years. Now, management did say that this development is happening later than expected. They were hoping that its technology would have been incorporated sooner, But the whole entirety of the electric vehicle industry has been developing much slower than expected. The forecasts for EV sales for 2024, but if you're looking at them back from 2020, they might not even be half of where those forecasts were hoping for in 2024. So it's behind schedule to be sure, and that's why this stock is down over 99% off its high, over 99% off its high. So it's been beaten down to be sure. Cash flow from operations has been going in the wrong direction and hasn't really been improving. Negative 267 million in the most recent trailing 12 months. And it's been flat. At least it hasn't been getting worse. And at least they stopped this continuous decrease. Now that sales have ramped up, hopefully for Luminar investors, this can turn around and start moving upwards. The return on invested capital also has stopped moving downward and is on an upward path here, but not enough evidence to dictate a trend here. Negative 109% is a really bad number, and they haven't demonstrated improvement in this metric again because they've primarily been investing in the technology, putting out money for the research and development, and they haven't yet started to really see the benefits from those investments. And so it's still very early days for this company. Needless to say, they are behind schedule and they are disappointing investors so far. The valuation is the cheapest it's been. It's trading at a forward price to sales of 0.945. It's the cheapest it's been going back all the way to January of 2024 when it was trading at a forward price to sales of 18. Back then, investors were more excited about Luminar Technologies and its prospects. That excitement has decreased, has fallen as the company continued to deliver updates to investors that were disappointing and more disappointing, and continuously disappointing investors that makes them lose confidence, and they're not willing to invest in a company that's continuously behind schedule. I've been following this stock for a couple of years now, and I've never rated it as a buy. I've always told investors this is more of a speculative investment, a high risk, high return type of investment. They haven't shown me enough evidence to warrant a buy rating up until this point. But what about today? Am I upgrading this rating? I'm not. I'm keeping the stock rated as a hold. I need to see more from this company before I can upgrade it to a buy. Hey everyone, I'm excited to announce that my book is finally available for sale. I've been working on it for more than a year now, so I'm really excited to finally share this with you now. It goes through my framework for evaluating stocks. Some of you often ask why I like this stock or why I like the other stock, and this framework provides you the things that I look at when I'm evaluating stocks. I've added the link in the description below.